It's a political thunderclap, one that could rewrite the financial DNA of New Zealand. Chris Hipkins and the Labour Party have dropped a bombshell. If elected next year, they will roll out a narrow capital gains tax to help fund free GP visits. Is this deja vu or a new strategy wrapped in old packaging? Has Chippy gone back on his word? Or is this a calculated pivot to win Middle New Zealand back? Either way, investors are clutching their calculators. Supporters call it long overdue fairness. Critics, they're calling it an economic hand grenade lobbed into an already fragile market. To cut through the noise, we've got none other than Zhiyang Cheng, New Zealand's top financial advisor, here to unpack what this means for property investors and homeowners alike.
Financial freedom faster. Financial freedom faster.
If you're serious about property, start with MortgageHQ Snapshot. It's changed the game for thousands of Kiwi investors. No fluff, no jargon, just a sharp look at your real options. Links in the description below. Take the shortcut today. Z, so we've heard it all over the news, right? From Mike Hosking all the way to One News. Everyone's talking about it, and as you know, all our clients are asking questions about it.
That's right.
So, what has happened over the last few weeks since the announcement, and what are the main questions you have from your clients?
Yeah, so last few weeks, obviously, when did it come out? Last week? Announcement?
Week and a half.
Yeah, so obviously it's stirred up a lot of questions from clients, and the main question I hear is property still a viable investment?
Yeah. I was in a meeting the other day with a client, and they asked us, should we still look to invest?
Yeah.
We had a pre-approval and we were discussing different types of properties at the time. As soon as this came out, they said, is property still the game?
Yeah.
And, the thing that came to mind was, if you're paying tax, you're making money.
Yeah.
Right?
Yeah.
So, I have this saying, I'd love to pay $1 million of tax a year.
Yeah.
Right? It's mean I'm making a lot of money.
Yep.
Right? So what do you think? Do you think property is still the way to go?
I mean, look, it comes down to what the alternatives are. When you look at all the other asset classes, they're all taxed in some shape or form, right? You've got shares. If you're trading shares, you're paying tax. If you're investing in foreign shares, there's a FIF tax. Crypto, that's taxable. What else is there? You've got, property is just one of those things where it hasn't been taxed. Well, for the most part, if you're holding property for the long term, it hasn't been taxed. But I think it's long overdue.
Yeah.
All the other Western countries are currently doing it.
That's right. And I think ultimately it will get pushed through at one point or another if one of the parties can do so.
That's right.
But to do it like just before or a policy introducing and going into re-election seems to be miscounted. I don't know. What do you think?
I mean, I guess, what they're doing is they're hiding it behind the free GP visits.
Yes. Yeah.
Yeah.
I think, the question is they've tried it before. Why do they think it's going to work this time? And I think it's because of the polls, right? There was these polls done about the favorability of a capital gains tax.
Yeah.
And, polls are polls. I think I remember Hillary Clinton and Donald Trump, and all the polls were against Donald Trump. Donald Trump won.
Yeah.
Right. So who knows what this will come out to be. We are obviously one-sided working in the industry, and all the people we talk to are looking to buy property, investment properties. So
That's right.
they're all concerned with it.
Yeah.
And they're all telling us this is sealed the deal for the National Party. But I guess it'll come out in the wash and we'll know soon.
Yeah.
So what do you think are some of the considerations or talking points moving on now that this has happened?
Yeah, I think one of the key things for our clients and the strategies that they'll implement moving forward is we now know that their policy is, the family home is untaxed. So we might see a lot of investors now putting some of their eggs in their family home, maybe doing a lot of renovations to boost the equity.
Yeah.
So-
What was it called? The mention effect.
Yeah.
That's right. Yeah. So when you have an exemption in that specific space, you have much larger and luxurious homes. So instead of having a decent home in a central Auckland location and several properties in the region, you sell up everything.
That's right.
Prior to this capital gains tax possibly happening and putting all your equity into the owner-occupied home.
Yeah.
So, I mean, that does these flow-on effects, you know.
Yeah.
The fact is that the capital gains tax hasn't been in place for some time. And so that's created a bit of stability.
That's right.
Market. So these changes, I think, is what really have got people concerned, especially where we are with the overall economic environment.
That's right. Yeah, I guess one thing to consider as well, policies, they always change. Just if you remember in 2021 when Labour brought in the interest deductibility, it's been 3 years and it was reversed by National. So just because when some party brings in a particular policy, it doesn't mean that's going to stick forever, right? Policies change. I guess the one key fundamentals that we have to focus on are the fundamentals of the investments, right? Yeah. So, you know, what we talk about at MortgageHQ, your cash flow is always going to be important. Fundamentals around capital gains is always going to be important. And then the capital improvement. These things are things that we always talk about.
Yeah. I think it is important to note here that the main thing that makes us property mad is our industry, which is the leverage aspect of it. You know, that's not going away.
Yeah.
And so is there any closing points you would say to people that are maybe on the fence or concerned now that this policy has come out?
Yeah, I guess, you know, the most important thing really is you can't beat inflation by doing nothing, right? So, you know, you are going to need to invest your money somewhere, right? Whether it be shares, whether it be property, whether it be cryptocurrency, maybe businesses, maybe in a term deposit, right? So yes, property, it may get harder because of the idea of the capital gains tax. But again, you still need to invest money somewhere, right?
Easy. Yeah, good closing points for our audience.
Yeah.
Thank you for your time and joining us today. See you.
Cheers, Simon.